This is Cece. Welcome to the Orbit. It is Wednesday, March 13th, and we have the market basically unchanged today. This follows a closing all-time high yesterday. As you can see on the chart, it is inside that intraday high we had the other day. The volatility situation is interesting. So we had CPI yesterday. We had this uptick in vol in SPX options really across the market. You saw the VIX tick higher the last couple of days. We've been talking about that on the Orbit. What's interesting is we have PPI tomorrow, and then we have options expiration on Friday. We also have retail sales. There's still some economic data to come in. Consumer sentiment is on Friday. But if you look at today in particular, this is the expected move for today. We are at about 0.34%, so not even 0.4%, and we are only a few minutes into the trading day. We saw that yesterday up near 0.8% coming into the day for that CPI number, and we saw it even intraday about 0.5% in the morning, and then it kind of came into 0.3%. And we were seeing swings yesterday. You can see these moves yesterday were 0.5% moves plus. They were even a little bit more than that intraday, especially this move from here to here, and then where we started this morning. So we're seeing these intraday moves that are more than 0.5%. Of course, last week we saw a bunch of moves that were more than 1%, and we high number tomorrow, and we're looking at about 13 vol there tomorrow, and we're looking at 16 vol today. Just to give you an indication of how much that's collapsed, that was about 25, 26 vol during that. The front day would be 25, 26 vol, and the next couple of days were closer to 20, and so that has collapsed pretty quickly after CPI. And the question was, coming into the week, was that just for CPI, or was that going to continue into expiration? Were market makers short gamma going into expiration? And is the market just going to be whippy and vol high all the way through Friday? Right now, traders have sort of backed off that vol a little bit. Vol has dropped a little bit. So if you are a premium seller seeing these intraday moves like we were seeing yesterday, we obviously aren't seeing much of a move today. But if you're a premium seller, be very careful about these expected moves and this vol, and really pay attention because yesterday, a lot of this IV, intraday was 25, and now we're looking at like 17 today. Now, obviously, there's not, this is the day before PPI, but even tomorrow, PPI, the vol is not high. We'll see what happens into the close. But anyway, that's just sort of a quick, short duration IV backdrop on this situation. And just to put that into perspective, let's say we were doing a credit put spread, and we select here, let's do expiring today, and let's zoom in a little bit here. So we've got the level is 51.50, which is only 18 points below here, and that's the expected move into the close, 51.50, and you'd be risking about, call it 400 to make 100. If you were to take that entire trade down, particularly looking at those lows from even yesterday and getting below those little wicks of those candles at the bottom, you're getting down to risking 450 to make 50, 88% probability of profit, but you're only down at that 51.40 strike. And obviously that's the kind of intraday volatility we've been seeing over the last couple of days. That would have been nothing, but maybe it's changed, and maybe the option sellers, the buyers from Friday and Monday, have turned into sellers, and maybe they're correct, and maybe that will, maybe there's a bunch of gamma ready to be sold into Friday, but we will find out, and the PPI will tell us a lot in the reaction to it tomorrow morning. Condor, this is today's strikes, and we were looking at 51.90. So let's take this a little wider and just see this. And let's go on the 1 week chart and see where we're lining up right now. You can see where that's lining up. As we do that, let's go out to Friday. And so this is sort of the monthly and quarterly expiry. Short put 51.30 and the short call 5200. We could take that lower strike down a little bit. Let's do it at 51.20. You can see what it looks like here. But again, that is not including those lows that we saw, just the other, on Monday. It's above those lows. So that's how much vol has shrunk already, just basically from yesterday to today following the CPI.